Cost segregation. Jeff was saying to me earlier, he goes, man, we're getting a lot of cost segregation questions now. And it seems like every week we're getting one. So here's how it works. When you get a real estate, and whether it's commercial or residential, if it's residential, you get what they call, it's classified as 1250 property from an accounting standpoint. But you get straight line depreciation, which means you take and divide the improved value over 27 and a half years. If it is commercial property, you divide it out over 39 years. What a cost segregation is you say, hey, this whole building's not going to last 39 years. There's a HVAC, there's carpet, there's paint, there's light fixtures, there's electrical lines, there's Cat 5, there's all this other stuff in there, fans, air conditioners, all that stuff that are going to last, that may be 7-year property, 5-year property. And what you're able to do there is write it off much faster. In the Tax Cut and Jobs Act, they gave us bonus depreciation. Anything under 20 years, you can write it off in year 1. And so when you have a single family residence that you're renting and you're getting some decent rents in it, it may be worthwhile to do a cost segregation to take to accelerate the depreciation, to not pay tax on those rents. Is it worth it? It's, there's 3 rules to tax planning, 3 rules to financial planning, which is to calculate, calculate, and calculate. You would get your pencil out. Is it, how much do they cost? It varies. You have a lot of people thinking they're all 10 grand. In the residential world, you can get software now and do them for, I think, around $1,000. I don't know whether that will hold up. There's lots of people that think they will. There's lots of people that think they won't. But, if you hired an engineer to actually go through the property and then all your other properties are like it, then there's a RevProc that, I think it was Rev, it was actually, no, it was a decision. That said you could use, if it's the same type of property, you could use the same methodology. They're not going to pound you. Have you seen those come up much, Jeff?
I have not. I know they're out there. I know the court case you're talking about that had the decision that you could use it in certain circumstances. One time I'm going to tell you that probably is a bad idea to get a cost segregation is if you're not planning on holding onto the property very long. If you're looking to sell it, it's really a waste of time and money to get this cost segregation done. However, if you're going to be holding it and it's a rental property and you want to be able to pick up some costs now rather than later, or expenses now rather than later, I think it could be very valuable.
Mm-hmm.